Oliver, Carlsberg has long been cheaper on a price-to-earnings basis than the other global brewers. Why is that?
Well, it's not necessarily because of the quality of its beer. It's more because of the quality of its operations. It's got a big position in Russia, and Russia's been an awful market for the last few years. The result is that Carlsberg shares for the past few years have been on about 13 times forward earnings.
Right.
Other big brewers such as AB InBev and SAB Miller have been on nearer 16. So a big discount for the problems in Russia.
That's changing a little bit, though, yeah?
Well, hopefully the worst is over for Carlsberg in Russia.
Right.
The worst of the regulation has come through. It was an awful year in 2013. Volumes in Russia were down 8% in the market overall. But the worst of the regulation has come through, and there are hopes that from here things might stabilise or maybe even pick up a bit.
Did we see anything good whatsoever in the results?
Well, the only good thing we saw in the results, which are out today, was that the fourth quarter was marginally less bad than the rest. They even managed to get a little bit of price increase in the fourth quarter. So maybe things are getting a little better in Russia.
Right. Let me ask you this, though. I know that Carlsberg is very dependent, even putting aside the issue of Russia, we have in Carlsberg a company that's very dependent on Europe generally. Why on earth, given my options, would I want to own a Europe-focused brewery when I can own SAB Miller or Heineken, which are stronger in the emerging markets?
That's a very good question. And in a sense, if you want a big global brewer, you have to own a bit of Western Europe. They're all present there. Carlsberg answer will be that it's making its Western European operations more efficient. It's important. About half of its profits, just under half, come from Western Europe. It's got this big program to make everything more efficient, to make buying more efficient, supply chains more efficient, that kind of thing. And it makes good returns in Western Europe. The return on invested capital is about 18%, far higher than what it gets in Russia or in Asia.
Yeah. So do we like the Asian expansion plan? Do we think they can make money there? Other brewers have struggled to do so despite pouring capital in.
It's a hard place to make money, particularly China, which is where a lot of the capital has gone to. Carlsberg's return on invested capital in Asia is about 10% against 18% in Europe, so it's not quite as profitable a place to operate. Nevertheless, it's a huge market. It's one of the only areas of the world where there's volume growth. Right. So Carlsberg's pouring money in, it's buying out some of its joint venture partners, it's building new breweries, that kind of thing. So CapEx really went up last year.
So it's probably Carlsberg, probably still isn't the biggest bargain in the brewing world.
No, its shares are cheap, and if you want a sort of discounted option on global brewing, Carlsberg would be the one. But what really will turn it is whether they can get these efficiencies out of Europe to compensate for the difficult market, and whether they can turn things around in Russia.
Bottoms up.
Cheers.